price does not move in a straight line, whereas most traders expect something like this, very simple and very smooth. The reality is the markets print multiple ranges, which can be confusing for traders. So how do you get from here to here? Hi, my name is JimHub FX, and in this video I'll be teaching you about time frame alignment. Welcome back. So I'm going to try and make this video as short and precise as possible. And we'll begin with understanding what time frame alignment is. So to start with, I have some graphics here. You can see that we have two types of order flows. We have a bullish order flow where price keeps making higher highs, higher lows, higher highs, higher lows, higher highs. We violate the higher highs to create even higher highs, while the higher lows, these points here, become protected, and that's a bullish order flow. On the bearish order flow, we have lower lows and lower highs, where we violate the lower lows to create other lower lows, and the process continues. So with that, we want to understand where time frame alignment usually comes in. As you can see, we have this is a bearish order flow chart. You can see that we have this leg, which is a continuation, a pro trend, because we are bearish. But when we have an order shift, an order flow shift on the lower time frames, we come and get a pullback, which is called a counter trend, where we get the retracement, continuation, retracement, and then the continuation. Now, time frame alignment comes in where you have a higher time frame, which is using the lower time frame as a confirmation to start a pullback. The time frames that we're going to be looking at are weekly, symbolized by the purple line, and 4-hour, which is symbolized by the black line. We also have M15, which is going to be symbolized by the orange line. So starting off at the weekly, we have, this is a bearish order flow, as we have said. Now, on this continuation leg, you can see that the H4, which is this black line, you can see that the H4 is also bearish. So as the weekly is creating lower, going to create a lower low, the H4 is also creating its own bearish order flow. However, when the H4 shifts its order flow to a bullish order flow, it's at this time that we now get an order flow shift on the H4, which symbolizes or creates a potential order flow shift on the weekly to play the counter. Remember that we have a continuation and a pullback phase, continuation and a pullback phase. So when the H4 shifts bullish, it symbolizes that the weekly might be ready to play the counter trend. As you can see here, we had the H4 following in line with the weekly order flow, but at this point we have a H4 break in structure, H4 shifting bullish, and now when the H4 shifted bullish, we have the H4 play the bullish order flow, and the weekly having its counter pullback. Now, how do you know when it's time for the weekly? The weekly might have formed its lower high and wants to form a lower low, which is this point here. You will find the H4 shifting again to bearish. Remember, we had the bearish move of the of the H4. Then we had an order flow shift on 4 hour, symbolizing that we might have a weekly pullback. The H4 shifted bullish, and then again, when it's time for the weekly to continue with its order flow, its bearish order flow, we have the H4 now shifting again to become bearish, so that it aligns with the weekly order flow, and then we have the continuation phase of the H4. So when at this point, when the H4 shifts bearish, symbolized by this red arrow, which symbolizes a break in the H4 structures, we have the order flow realignment. Now weekly is bearish and H4 has also shifted bearish. So it symbolizes that we may now come to take out this weak swing of the weekly, which is symbolized by this red arrow breaking. Take out the weekly low or the weekly weak swing to create another lower low. Now on the H4, similar to the weekly, which uses the H4 which uses the H4 as the internal, we have the H4 using the M15. Now in this case, we have a bullish order flow. The H4 is bullish, symbolized by this higher highs, higher lows, the black line, higher highs, higher lows, and then higher highs. On the M15, you will see M15 high. H4 is on a bullish uptrend. You will see the M15 bullish as well. But when the H4 wants to pull back, the M15 will shift bearish, symbolized by this break, the red arrow, M15 switching bearish, to play the counter, the pullback of the H4. And once the H4 is ready to continue its bullish order flow, the M15 will again shift bullish, so that it realigns with the H4 order flow. So you can see the M15 in the pro trend, the M15 is bullish. In the counter, the M15 is bearish, bullish. M15 is also bullish, shifts bullish to realign with the H4 structures. So that's how everything, the time frames align. And you can see here we have all of the weekly H4 and M15 charts together. We have the purple line symbolizing the weekly. We have the purple line in a bullish momentum. We have the higher low, we have the higher high, higher low, and then we have the higher high. On the H4, you have the black line. On the H4, you have higher highs, higher low, that point. You have a higher high at this point, higher low, this point, higher high. And once the weekly wants to pull back, you'll have the H4 shifting bearish. Play the counter trend, and then when the weekly wants to continue with its order flow, the bullish order flow, H4 will again shift bullish, symbolized by this green line, shifts bullish, and then the order flow realignment. But once you notice that all these time frames are connected to the M15, you look at the M15 from a H4. On this leg, the H4 is bullish, the M15 is also bullish on the continuation phase. But once the H4 wants to shift bearish, you have the M15 shifting bearish as well. Play the counter trend and then shift bullish once H4 wants to play the bullish continuation. So that's how the time frames are aligned. That's the correlation between the charts, between the higher time frames and the lower time frames. Whatever happens in the higher time frames must first happen in the lower time frames. Hope you get that right. Whatever happens in the higher time frames must first happen in the lower time frames. So that's it, all about time frame alignment. And right now I want us to go through some example on Nasdaq. We have Nasdaq, NAS 100, which we have the weekly chart. Oh, before I also forget, we have there's something I need to mention. We have 3 types of structures. Maybe I should just write that down here. We have 3 types of structure mapping. We have one, we have the swing structures. Then we have the internal structures, and then we have the fractal structures. Now, the swing is symbolized by this blue. In my markings, the swings are symbolized by a blue and a green line, whereby the blue is a protected swing and the green is a weak swing. Internal structures, we have these minor breaks over here. You can see that we had lower low, lower high, lower low, lower high, lower low, lower high, lower low. So those are the internal structures. They are inside the swing structures. And then we have the fractal structures, which are symbolized by some changes in character. You understand that the changes in where we have some very minor changes in price action, something like here we have a lower low, a lower high, a lower low, and then price creates a higher high to break this smaller high over here. So we have that as a fractal structure, which is symbolized by a chalk. It's a sign that we have a small minor pullback before the internal actually has its pullback. It symbolizes exactly, the fractal symbolizes the start of an internal pullback. So there you have it. You have the swing, which is the blue line, the green, the bigger order flow, and then we have the internal, which is the minor, the medium order flow inside the swing, and then we have the fractal, which symbolizes the changes in internal structures. So the weekly, we usually use it to understand perspective. Usually use it to understand the perspective. Like right now we are in a bullish order flow, and that gives us a sense that Nasdaq, like this is a 2022 chart. It's 2022 October. So on a weekly basis, you understand that the weekly is pulling back, and we might get an order flow realignment towards the week swing. The H4 plays the narrative in terms of the H4 will tell you when the swing is either pulling back or is ready to play the continuation. And the M15, that's where you have your immediate buyers. Remember that the M15 price action is usually fast. Every candle is a duration of 15 minutes. So you'll have a lot of candles which will form the H4, which are larger in size because they cover 4 hours. And then you have the weekly, where every candle symbolizes a week's price action. So you have the M15, which you use on a daily basis to understand where price is heading, to understand your supply and demand zones, and to understand where it's likely that price might either play a continuation or a counter. So with that, there's also another thing you need to understand is that to make it simple and easy, the H4, the weekly, we have the week swing, the swing structures of the week from here and here, week swing and then the protected. The H4 or the internal of the weekly is usually forms the H4 swing structures. So in this case, we have this as the internal. It's an open range. We have higher high, higher low. We need to come from higher high and then higher low if we are going to have the continuation of the order flow on the internal of the weekly. But when you look at the H4, when you look at the H4 chart, whatever the internal of the weekly is, usually forms the swing structures on the H4. Let me just symbolize that clearly. First, put this all, group these markings on a weekly chart. So that we have the weekly. But when you come to the H4, we have the internals of the weekly form the swings of the H4. So in this case, we have this internal protected of the weekly chart becomes the protected swing of the H4. Once we have an internal week on the weekly, it will be the week structure, week swing on the H4. And then here we have the break of structure on the H4. So in regard with that, this is what we have on the H4. We are yet to know where the week swing will be formed, but we already have a protected swing and we have a break of structure over here. This was the previous week swing on the H4 because we have order flow, lower low, lower high, lower low, lower high, lower low. So we are yet to form our lower low at this point, or wherever you're going to form. It may form down here, it will form after tapping a demand, but we know that the order flow on the H4 is bearish. Why is it bearish? To facilitate the weekly pullback, the weekly counter trend. So now when you look at the H4, we need to look at the internal structures of the H4. Why? We need to understand where the M15 swing structures are. Let's just group that. So on the H4, we have, let's look at the internal structures. So we have internal structures of lower low, lower high, lower low, lower high, lower low, and then we had a higher high. At this point, we have that being an internal breakup structure. I know that we have an internal breakup structure from this point. There. So that means that we have this point as our internal strong, and on the internal of the H4 we also have this as the internal weak. So what are we waiting for? We are waiting for the internal of the H4 to shift bullish, so that we may have a weak swing on the H4. We have this break of structure, so now we are waiting for a weak swing on the H4 so that we may get a complete swing on the H4 and also on the internal of the weekly. Also note that the internals of the H4, what do they form? They form the swings. They form the swings of the M15, correct? They form the swings of the M15. So once we come to the M15, we'll have the internals of the H4 will be your swings on the M15. It doesn't usually it's not usually as accurate a description or analysis, because you may have some relatively unique price action but on the lower time frames, but generally you can use this to formulate your biases. It's usually correct to a point and plays out, because the markets are fractal. They'll first follow the structures on the lower time frames before everything that happens on the higher time frames must first happen on the lower time frames. So you have, this is the M15. This is the M15. The M15 swing structures. And how do you know when the M15 is pulling back? You'll have, again, fractal nature. You'll have the M15 having a shift in order flow as well. Like we had that internal break of structure, then we have that internal break of structure. So you have on the M15 we are bearish, but on the internal we have this lower low, lower high, lower low, lower high. Then we form the lower low, and then we have a higher high. We broke structure here. We have a break of internal structure shifting to bullish to symbolize the counter trend of the M15. So here we have an internal break of structure to the upside, which now shows us where our weak swing is. For us to get a what's it called, weak swing, for us to get an internal not an internal, weak swing H4, remember on the H4 we have an open. In the H4 we have an open swing structure. We don't have a weak swing yet. So for us to get a weak swing, we need the M15 to have an order flow shift. You have this lower low, lower high, lower low, then we have a higher high. Once we get this order flow shift to bullish, we now have formed our weak swing on the H4, and that's when we label our weak swing from wherever point it will be formed from. So let's play price action forward and see if we get the formation of a weak swing on the M15 under the H4, which will be symbolized by a shift in order flow on the M15. Remember that we have this fractal nature. Whatever happens on the H4 must first happen on the M15. So the H4 is bullish, but for the H4 to have a weak swing, this point over here, we need the H4, the M15 to shift bearish, form the weak swing of the H4, and then once the H4 is done playing the counter trend, the M15 will shift bullish again, and that's what this chart represents. The weekly chart bullish, the H4 will form some counter trends, some pro trends, and then the M15 on the H4 will also have its own price action. So let's get back to the charts. We play the M15 and see if we have a formation of a weak swing on the H4 on our HTF higher time frame. I'm going to play it a bit fast. Remember, for our structure shift, we always need this point to have a close above. We need to have a close above the highest point of the swing structures of the M15. We need to have a close above, but we've just tweaked this position, so we yet do not have a weak swing on the H4. So that high is protected for now. As you can see, price is just playing internally. We have a protected swing over there, and we have a weak swing there. So until price breaks one of the two, that's when we'll have to remap our structures. So now we have a close above. We have a close above our protected swing. The M15 has shifted bullish. We have a break of structure there, and the previous weak swing now becomes our protected swing on the M15. So now M15 has shifted bullish. M15 has shifted bullish. What does this symbolize? Let's get back to our chart over here. As you can see, M15 order flow shift. We have M15 shifting. In this chart, we have the M15 shifting bearish, so that it symbolizes the H4 wants to play the counter trend. So we go back to our chart. We have the M15 shifting bullish. And what is that on the H4? That is the formation of our weak swing, the H4. You can see the internal of the H4 shifted bullish at that point. Remember what we said, that price is fractal. Price is fractal. So whatever happens on the lower time frames will go ahead and happen on the higher time frames, or whatever happens on the higher time frames will first happen on the lower time frames. So now we have these are the internal protected, we have an internal break of structure, and on the H4, because now we have a shift in order flow on the internal structures, we now have the formation of our weak swing. And with that, we have a complete range on the H4. A complete range on the H4, a complete swing range on the H4. But on the weekly, we want remember we already have our swing structures. For us to have an order flow realignment, we need the H4, we need the H4 to shift bullish, so that we know that we now have the weekly being bullish, the H4 being bullish, and now we have a time frame an order flow realignment, so that we know that we may now likely head towards the weak swing. The pullback, the counter trend has already finished, and we may now head to the weak swing. You can also look at this chart. The weekly pulls, the H4 has a counter, structure shift, an order flow shift to bullish, symbolizing this counter trend, and then we have H4 shifting again bearish, so that it realigns the order flow of the weekly, and we have the drop. So now we are going to play we are going to go back to the M15, but from the H4 perspective, and see if we have H4, if we have the H4 shifting bullish at that point, we'll understand if we'll have a realignment on the weekly. So let's play price. At this point, we can look at the M15. And see where our string structures are being formed. So we have our break of structure there. We have a high formation of a lower low, lower low, lower high, lower low, lower high, and then we have the lower low. So with this, we now know that since the internal of the M15 shifted bearish, now we have the formation of our weak swing, of our new weak swing on the M15. So now on the M15, we have our new swing structures. From this point. So what are we waiting for? We are waiting for either we have the break towards the weak swing or the break towards the protected swing, which will also formulate our bias on the H4 and also on the weekly. So let's play price forward. The internal structures can be shifting inside here, but since we are looking at the bigger picture on the H4 and the H4 and the weekly, we won't be so concerned with the internal of the M15. So we have our breakup structure because we have a close above, but it's very minor. We have those candles slightly just take out that wick swing, but let's play price and see. There, so you can see we have that break, and now our protected swing shifts to the lowest point. The lowest point. The lowest point between the wick swing and the break. So the lowest point is that point. So the M15 is now pulling back. And see we had higher highs, higher lows, we had lower lows, lower highs, lower lows, and now we have the formation of a higher high, higher low, and then a higher high. So the M15 is facilitating the H4 pullback. Remember that we have our H4 swings from this protected swing and this wick swing. Those are our H4 swing structures. But the M15 is pulling back, playing the bullish order flow to play the counter of the H4. So we just continue playing price. And then now we have the M15 has once again shifted bearish at that point. Have breakup structure, and then we have our new protected swing. This was supposed to be marked with a red. It's a breakup structure. We have this as a protected swing. Now the M15 has shifted bearish again, realigning with the H4, realigning with the H4 structures which are bearish. So we may now have, it's a signal that price has now pushed back towards either discounted pricing, premium pricing, or equilibrium, and now price may want to play the continuation of the H4. So let's play price and see. Let's play price and see if we will have a breakup structure on the H4. Now the M15 internal has shifted bullish, trying to play this as fast as possible, make the video short that you may grasp everything all together. We have the formation of our wick swing at that point. So let's see if we remember, we still have our H4 structures at this point. We protected the wick swing. You're still yet to break the wick swing. So the M15 can do whatever it wants inside the H4, but until we have those realignments, we just play price. So we have protected, not yet broken quite. Now again the M15 has shifted bullish. Have a breakup structure. The M15 has shifted bullish, maybe to play a deeper pullback into the H4. or we're ready, the H4 shifts bullish, so that we may realign with the weekly structure. Let's play price. So I guess by now you understand where the H4 uses the M15 as its internal structures, and the weekly uses the H4 as the internal structures. So you have this, say this as the week swing of the M15, and that is the week swing of the M15. So remember that on the weekly we are bullish. The H4 needs to shift bullish as well, so that we may realign structure wise with the general order flow. Remember, the higher time frames carry a lot of weight, so the weekly structures will likely and possibly carry the lower time frames, and their order flows will likely be respected. So we have the M15 still. They had to break these structures there. They had to break those structures. Now we have a break. The protected swing shifts. Once you have a break in structure, you shift your protected swing to the lowest point. So as you can see, we have the H4 counter trend, but on the M15 we have a deeper, more price action being formed. The M15 is facilitating the H4 pullback, but we are deep inside the weekly equilibrium ranges, so we might have an order flow shift on the H4. M15. So right now it's either we realign with the H4 structures, have a bearish order flow shift on the M15, and then we take out the weak swing, or the M15 we break the H4 structures, and then we realign with the week. So that's what we are watching for. See, here we have break, another break of structure, and the protected swing moves to the highest, to the lowest point, because we're in a bullish order flow. We have lower lows, lower highs, lower lows, lower highs. You can see the M15 carries a lot of fractal price action. It's very immediate. That's why you usually have to mark up your M15 structures daily, and you have to follow up with what price it's doing. So right now it's up. We have the internal of the M15. We have lower low, low high, lower low, lower high, lower low, and then a shift to a bullish order flow. Higher highs, higher lows, higher highs, higher lows, higher highs. So this point we had another break of structure, and our protected swing was shifted to that point. So at this point, you can look at the H4 and see what price action has printed on the H4 using the M15. You now understand how these order flows usually align, how these time frames usually align. And on the H4 we have a break of structure at that point. Have a break of structure at that point. So now we have a protected swing, this low. The weak swing now shifts to be the protected swing, and we have a break of structure over here. What does that look? How does that look on the weekly? So on the weekly, we have H4 has now shifted bullish, which the H4 is now the internal of the weekly. You can see the internal, we had this as the protected internal, have an internal break of structure, and then we have our protected internal being this low. See how that realigns well with the H4. The H4 structures are the internals of the weekly structures. So now, once you understand that, you can now see that the weekly, we have a bullish order flow. Have a bullish order flow from here. Have the counter trend, the pullback, and then now the H4, the internal structures of the weekly, which are the H4 swings, have shifted bullish. So you may now have something of the sort towards the weak swing, and that's how you can formulate long-term perspectives on what price is likely to do. So you can just play price. We're not going to go deeper into the M15. We're going to play price on the H4 from now. So play price on the H4 and see how it forms the internals of the weekly. So we go back to the H4. So we have our swing structures on the H4. And to see if we'll have a pullback on the H4. Pullback because we have already we've broken structure. Now have a higher high. We need to form a higher low and then form another higher high because order flow has now realigned with the weekly. So mostly the weak swings or price will usually use the supplies and demands to form those points where price can retrace back and form those weak swings or start the counter trends. And look at the weekly. Okay. You can see we still don't have any major retracement on the weekly. Look at the H4. See if we have a formation of our weak swing, higher highs, higher lows, higher highs, higher lows. Then we have higher highs, higher lows. Still don't have the formation of a weak swing on the H4. Now you can see that we had we symbolize it with a red line. We have this, we have lower lows, lower high, lower low, lower high, lower low, lower high. Then we have a low, no, sorry about that, I've confused something. We have higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then we now have the formation of a lower low. This is a break in internal structures of the H4. It's an internal break. We had this continuation, internal breaks of structure where price was bullish. But after we've broken structure to the downside, we have an internal break of structure. We now have a complete structure on the H4. So now we have a complete structure on the H4. This is the complete structure. We have our weak swing, we have a weak swing, and then we have our protected swing. The weekly, once we have a weak swing on the H4 on the weekly, we should have formed our internal week. You can see, as much as this is the H4 structure, it's also the weekly internal. Have the weekly internal, so our internal week is that point, and you can see it aligns perfectly with the H4 swing structures, this being the internal week of the weekly structures and also being the week swing of the H4. So now let's just watch price from a weekly perspective and see we have this counter trend beginning, then we'll form a higher high from that point and take out the week swing, because now we have an order flow realignment. Order flow. We have an order flow realignment. So let's play price. We're just watching the weekly. We are just watching the weekly because we now understand how the time frames are aligned and what to expect. So if you go down deeper, this is the weekly internal, it's the H4 swing structures, and on the M15 you'll have further price action, as we've seen, as I demonstrated from this point. Have the purple line being the weekly order flow is bullish. We have the H4 being the black line, the swing structures have a bullish order flow at this point, correlating with the week bullish. Once the weekly wants to pull back, we have the H4 shifting bearish, and once the weekly wants to continue with its pro trend, we have the H4 shifting bullish to realign with the weekly. Also on the M15, similar case, the H4 is bullish, but the H4 needs to pull back. The M15 shifts bearish. This point shifts bearish. Then once the H4 wants to continue with its pro trend, we have the H4, the M15 shifting bullish to realign. So with that, we already know that at one point this is the target. This is the point where we are going, or where price is likely to head. It may do whatever it wants inside here, but once you understand those time frame alignments, you already have a clear perspective of where price is likely to head. And that's that point. We have a close above. This was the internal week of the H4 of the weekly. We now have a new internal strong, internal protected on the weekly. Internal strong. See, we have the internal like this. We have bearish order flow, lower lows, lower highs, lower low, and then we have an order flow shift, realigning with the swing structures to form a higher high, higher low. Then we have the higher high. So this we have an IBOS at that point. So internal protected shifts from this point to that point, and then we have the weekly. We have a close above the previous week's swing. So with this close above, this is the break of structure. Have a break of structure, and with that break of structure, we have a new swing, a new protected swing on the weekly. And that's how the time frame alignments work. This internal range, if you look closely, it will be the H4 swing structures. It will be the H4 swing structures. In the H4 we have the H4 showed that it was pulling back by having this bearish break of structure. We had higher highs, higher lows, higher highs, higher lows, higher highs, and then we had the formation of a lower low. Price signaled that it was pulling back. Then we had the lower highs, lower lows, lower highs, lower lows, and then price finally shifted bullish again with this break over here, this point, to form a higher high, higher low, higher high, higher low, higher high. So on the H4 we have this as the break of structure. Have that as the break of structure, and we have a protected swing. Shifting from this point to that low. So on the weekly, you can see that our H4 swings are forming the weekly internal structures. So that's it. That's all about the time frame alignments. That's what I usually use. This is market structure. This is a strategy based on market structure. You can see the weekly internal is the H4 swing, and the H4 internal is the M15 swing structures. So you can go practice, do repetitions, understand how the time frames align, how how the time frames are fractal. Whatever happens on the higher time frames must first happen on the lower time frames, and with practice you'll come to it sticks. You'll come to understand how the order flow usually works, how order flow moves from one point to another, and why, despite such a zone being a good supply or a good supply, that it's highly risky trying to short from such a supply because it's a weak swing. So that's it. Thanks for watching. Please subscribe, like, share. Also have in the description we have a link to my Telegram channel where I post daily charts, daily follow-ups, midday price actions, and trades, my trades as well, and case studies. So join. The link is in the description, and let's learn together. Thank